You're watching Spotlight on Real Estate with Shemille Blake.
Good morning and welcome to Spotlight on Real Estate. I'm your host, Shemille Blake, the real estate goddess. And today in the spotlight with me is Georgia Premier Loan Officer Sally Thompson.
Thank you for having me today.
Welcome, welcome. So, Georgia is one of the fastest growing states in America, and it's a great place to buy real estate. But from my own personal experience buying my own property, I didn't have a clue when I got to the closing table. And so a lot of my clients, I find that they just don't know the process. So today, I want us to educate the public on the buying process, the mortgage side of real estate. And can you start off by telling us, what is your role as a loan officer?
Yes. So I actually started in this business about 30 years ago, and I'm originally from Buffalo. Go Bills. And and you know, when I started in this business, I didn't know much about it either, but it was very interesting, and got involved as being a loan processor at first, and then started as a loan originator. And the reason that I loved that so much was because you get a little bit more involved in people and their lives, and every situation and scenario is different. The loan officer's role is really to find out the nitty-gritty of someone's financial situation, right? We get to know them based off their assets, their income, their credit, and take all that, put it together for the best loan package that we can for them to get them into that house for the long term.
Excellent, that is incredible. And so, Sally, you're the best of the best.
Thank you.
I met you 8 months ago.
Yes.
And what I love about you is that you're very accessible.
Yes.
You're knowledgeable. You're like a straight shooter.
Yes.
If it can't close, it just can't close.
That's true.
And so the aim is to close. And so for clients out there, what are the different type of mortgage loans that they should know about?
So there's several different types of loans, and there's a loan that should really fit just about everybody out there. You have your basics and your standards, such as a conventional loan, an FHA, and a VA. Most people are going to fit into one of those categories. There are specific loans that are outside of that for a more specific type buyer. Maybe someone who is self-employed and can't document a lot of income and things like that. There's other programs out there related for them, non-conforming type of loans. But your conventional and FHA and VA are going to be pretty much your standards. A VA loan is designed directly for a veteran. So if you are a veteran and you're eligible for it, that is definitely the route you want to go. It's 100% financing and there's no PMI, low rates as well. So it's a great option for somebody. And conventional buyer is definitely for those more higher credit score borrowers who maybe have some money to put down. It's a real A-paper type of loan. They tend to be less lenient on like an appraisal, but more strict on the buyer profile.
Understood.
And then probably more of what our population fits into is like an FHA type of loan, which is also great for a first-time home buyer because it's a low down payment, low rates, and they're much more lenient on a credit structure as well. So if someone maybe has a couple dings or maybe has had some issues in the past, FHA is going to be much more lenient with something like that.
That's good to know. All right, so as a real estate agent, there are two major things that are affecting buyers right now. One, high interest rate, and bad credit. So let's start with credit first.
Yeah.
Because I've had clients who they have the income, they have the down payment, but they just have delinquency on their credit from collections or late payments. What would be your advice to them as far as credit when buying a home?
So credit is a key piece to this. When an underwriter looks at a file, they're really looking at someone's ability to repay. And so they're looking at, the credit aspect, the income asset, the asset aspect of it. But credit, I always, when I start talking to a borrower up front, that's really one of the first questions that I'm going to ask them is, what does your credit look like? Because if they're not credit ready, meaning credit scores or overall credit profile, then the rest of it right now probably doesn't matter because an underwriter and lenders are looking at that minimum guidelines. So if they are currently having any type of issue with that, then I give them what I call a plan for success. All right. And I'll discuss with them what has been going on. Is it late payments? Is it collections? Is it judgments? Did they have a bankruptcy? Whatever the credit issue may be, and kind of counsel them back on that. Definitely when COVID hit, we had, definitely probably an increase in credit issues because a lot of people had a loss of job. Medical was definitely a problem. So sometimes with the combination of both of those, credit certainly suffered, 100%. Right? But when, as lenders, when we look at it, we're looking at the entire profile. So is someone's credit situation always been a problem, or was it just an isolated incident such as COVID? Okay, so when we're looking at the overall picture of it, we want to be looking at, okay, when did they have the problem, and have they been able to resolve the problem and get back on track with that? If they haven't, that's where my job comes in, to give them that advice for free and let them know, what they need to do as a plan for success to get ready for purchasing a home down the road.
Great. So let's talk about interest rates.
Yes.
Now, interest rates have dropped significantly at the end of 2023, which is great news. But then there's people that are still reluctant to buying because they think it's going to go back to 2% and 3%. So what would be your advice to someone? Should they be concerned about interest rates when buying?
So I don't think so. Here's what people need to understand. Historically, the national average of interest rates has been 8.5%. So with us being in the low sixes right now, we're below the national average historically.
Absolutely.
I think what people don't understand is that interest rates went from that 2 and 3% range up so quickly. It was sticker shock.
Yes.
Right? And so within a 12-month period, they saw an increase of rates of 3 to 4%, and everybody got scared, right? But where rates are right now is where they're supposed to be. So, this is a good time to buy because it definitely encourages, the home ownership, process, right? But, they're starting to go down again a little bit more. Are they going to go down to like a 2 to 3%? I don't see that happening. That's an unrealistic rate market. So I think it's really important to encourage people that this is normal. This is what it should be. This is a healthy rate market, and this is the time to buy. Don't wait until 2 years from now when you think, that those rates might come down more, because guess what? That house that you want to buy is going to cost more in 2 years. Get the house now at where the rates are, and guess what? If those rates go down, then go ahead and refinance. You will have built the equity, and you don't have to pay for it at that point.
There you go. That makes a lot of sense. So for the viewers at home that would love to connect with you, Sally, because you're absolutely amazing, where can they find you?
Well, they can find me here at Metro Brokers Financial, and they can contact me via phone at 404-847-2525, and I'm always happy to assist.
Well, thank you so much, Sally, for being here. It was wonderful having you, and thank you for taking time out of your busy schedule to chat with us. And thank you to our viewers at home. We do appreciate you. And if you're ever in the market looking for a home, or you'd like a free consult, feel free to reach me on TikTok or Instagram at Shemille Blake. This is Spotlight on Real Estate. Thank you so much for joining us. Have a great week.